I want to bring in senior markets correspondent Kevin Green to help set up the action today. All right, KG, we've got a lot to dive into today. We've got trade, we've got Fed reaction. We always want to get your technical levels, but let's start out with the latest on trade. Catch people up on where we stand when it comes to President Trump and some of the commentary.
Yeah, definitely. I mean, if you looked at yesterday's price action going into the close, obviously the Fed meeting, we had that information from Jerome Powell, but we really didn't get much. But towards the end of the day, about 10 minutes before, 8 minutes before the close, we actually had this announcement coming out regarding a potential trade deal that was going to be announced. And now we have the information that is going to be announced with the UK here. And the press conference right now is scheduled for 10 a.m. Eastern time. And this is going to be the first deal that has been made since Liberation Day. And President Trump has discussed and said that this is a full and comprehensive plan. And we will get some more details over today's session. And that's why we actually saw equities pop going into the close. And then we saw a little bit more follow through as well. Not only just this commentary regarding the trade deal, but also with the CHIPS Act situation here, the CHIPS embargo. So there's a lot of news flow that has been bullish for the market. We have seen, obviously equities rising because of this, and we'll get more information as to what this deal entails. It is expected to really focus around steel and autos for the UK, and potentially maybe some agricultural products here from the United States.
Okay, and so look, these are two pretty friendly trading partners, the U.S. and the U.K. Not, I guess, quite the deal that really. I guess I don't want to throw cold water on this. Obviously, it's good to obviously see that we are having a deal come forward, but it is with a friendlier trading partner. What else do we make of this?
Yeah, exactly, right. This is a friendly trade partner. And actually, we run a trade surplus with the UK if you kind of look at the 2024 data, as well as some of the 2025 data here. So once again, this is a friendly partner, not only when it comes to trade, but also when you're looking at defense. And so this is something that has probably been a little bit on the radar, but the market is still enthusiastic, right? It might be the template for trade plans and trade deals moving forward for other countries. And I think that's where you're getting some of this optimism. But you are correct. At the end of the day, this is a very friendly partner and that has had really good commentary. And then also when you're looking at the tariffs that we are levying on the UK right now, they're sitting at 10%. So they're actually at the minimum base level. And then we are going to be focused on what the new tariff rate is going to be, if there's going to be a tariff at all. And so that's, once again, very key. And I always have to go back and say, we have a trade surplus with the UK. So this is not one of those situations where we have a massive deficit by any stretch of the imagination.
Okay, so in other words, could 10% potentially be the new, kind of bottom level or minimum level with regard to tariffs? All right, let's talk a little bit about the Fed. Yesterday, one of the things that came up is the Fed chair. There was a lot of wait and see, wait. I mean, at least more than a dozen times you heard wait. We knew that this was kind of going to be the commentary in terms of the being data dependent. What else stood out to you, KG?
Yeah, exactly. I don't think there was anything that was actually shocking with the FOMC meeting as well as Powell's commentary. They're going to wait for the hard data to really reflect the impacts of the tariff policy. And I think Jerome Powell pretty much stated that his concern is his stagflation. He didn't say that specifically, but the two concerns that the Fed really has is sticky inflation or a reversal when it comes to the progress on inflation, meaning to the upside, and or seeing a situation here where we have the labor market really kind of remaining fairly healthy and you have stagnant growth when it comes to GDP. Those are all the concerns for the Fed, and rightfully so. And once again, it wasn't really any type of fireworks here. We didn't get much commentary around the June meeting. You are seeing the Fed Fund futures actually pushing out the rate cut to July rather than June. Just because of the commentary. And we talked about this earlier this week. They only have about 6 weeks. We only have about 6 weeks to really try to give the Fed a reason to cut in June when it comes to the economic data. And I'm not sure if that's enough for them to actually move on this item here. And then talking about weighing the pros and cons of stalling out when it comes to rate cuts. At the end of the day, they're going to balance out what the impact is going to be. Is it going to be inflationary? Are we going to have more of an inflationary scare to the upside, or are we going to have more of a labor market deterioration situation? It seems like based on his tone, I think he's concerned a little bit more around the labor market and economic growth rather than inflation at the moment.
All right, so we hold steady between 4.25% to 4.5% as expected. Let me get your take on how things stand when it comes to the chips. We're seeing NVDA continue to tick higher in the pre-market. AMD looking like that they'll gain some more. AMD will gain some more ground today. Talk to us a little bit about, once again, this was like essentially some late breaking news that we saw towards the close yesterday.
Yes, so we are seeing a potential revision or an elimination of this, this chip restriction that the Biden administration put into place, and it was actually going to go into effect on May 15th. The Trump administration seems like they're actually going to be actually eliminating that rule and then creating a new rule that's going to be a lot more simpler. Now, obviously, there's a lot of enthusiasm when it comes to NVIDIA. This actually could drive continued growth in sales for NVIDIA. But it doesn't appear that this is actually targeted towards China, which is one of the reasons why we actually had this rule in the Biden administration. This might actually be a benefit for some Middle Eastern countries that we deal with that, once again, could be leverage for a trade deal, especially if you're kind of looking at the UAE and some of the other countries out there. And President Trump is going to be visiting the Middle East next week. So this is actually kind of aligning really well with that visit. And that's why you're seeing a lot of this enthusiasm. You probably will still see some stringent restrictions when it comes to China, but once again, reducing or relaxing some of these restrictions when it comes to the Middle East, which is going to be ultimately a boon for them as well as for NVIDIA and other companies that actually have exposure to these GPUs and data center expansion strategies.
Okay, and then KG, we finished at 56.31 yesterday. Where do we go to the upside from here and potentially to the downside?
Yeah, so to the upside, looking at the first level, 5,700, obviously we might be actually hitting that at the open here. We might be fairly close here. And then you're looking at 5,750 to the upside. To the downside, I would still look at 5,600 as being your area of support, which has been able to hold here, especially when you kind of look at the close yesterday and that rapid move to the upside. We were pretty much defending that level.
Okay, 5,700, potentially as high as 5,750 to the upside. Support 5,600. Thank you, Kevin Green, Senior Markets Correspondent here on Schwab Network. Appreciate you, KG.